Ladies and gentlemen, good day and welcome to Smiths Limited Q2 FY24 post-results conference call hosted by Smiths Limited. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone telephone. Please note that this conference is being recorded. I now hand the conference over to Mr. Amit Hiranandani from Smiths Limited. Thank you and over to you, sir.
Thank you. Good morning, everyone. On behalf of Smiths Limited, I welcome you all to Q2 FY24 conference call of Steel Strips Wheels Limited. We are pleased to host the senior management of the company. Today we have with us Mr. Mohan Joshi, Executive Director, Mr. Naveen Sorat, CFO, and Mr. Pranav Jain, DGM Finance. We will start the call with initial commentary from the management and then we will open the floor for Q&A. Now, I hand over the call to the management team. Over to you, sir.
Thank you, Amit. Good morning, everyone. Hope everyone is doing well. On behalf of Steel Strips Wheels Limited, I extend a warm welcome to everyone joining us today to discuss our financial results for quarter and half year ended 30th September 2023. I hope everyone had an opportunity to go through the financial results and investor presentation, which we have uploaded on the stock exchange and on our company website. I will begin with the capex project and then we'll move to our financial and operational performance for Q2 and H1 FY24. Post that, we will open the floor for Q&A. To start with, our total capex spend for H1 FY24 is rupees 190 crores. We expect for the full year FY24 capex spend to be around 320 crores on an alloy wheel brownfield capacity expansion project, which we have preponed the capex for Q3 FY24, for which total capex required is approximate 190 crores, and till date 130 crores is spent on this project. This project will increase the alloy wheel capacity by 1.8 million wheel rims per annum. It is expected to get completed by start of Q4. On such account, we have made a fresh net borrowing of rupees 150 crores. On steel wheel business, on 12th of October 2023, we have received NCLT order for acquisition of AMW Auto Components Limited for the consideration amount of 138 crores, which will be paid within 90 days of receipt of the order, and the resolution plan needs to be implemented. We have set out action plan for timely and smooth implementation of the resolution plan, and for this acquisition, we expect total capex of roughly 158 crores, inclusive of maintenance spend, and we expect AMW plant in Bhuj to become commercially operational by Q1 FY25. Then coming to the half-yearly performance of FY24, revenue from operation for the period increased by 3.9% year-on-year to 2178 crores from 2097 crores in H1 of FY24. EBITDA saw a 4.8% growth at rupees 238 crores against rupees 227 crores in H1 FY23. Profit before tax stood at around 150 crores and profit after tax stood at around rupees 100 crores, with profit after tax margin for the first half of FY23 stood at 2.6%. Revenue mix for first half of FY24 has been 28% from the alloy wheel and balance 72% from the steel wheel business. For alloy wheel rim, sale volume has increased by 6% year-on-year to 14.8 lakh wheel rims. For steel wheel rim, sales volume has increased by 8% year-on-year to 82.7 lakh wheel rims. On quarterly performance, in Q2 FY24, revenue from operations for quarter increased by 4.9% year-on-year to 1134 crores from 1081 crores. EBITDA saw a 6.2% growth at 124 crores against rupees 117 crore reported in Q2 FY23. Profit before tax stood at 79 crore and profit after tax at 52 crore. Profit after tax margin for Q2 FY24 stood at 4.6%. Revenue mix for the quarter has been 28% for the alloy wheel and 72% is for the steel wheel. While alloy wheel rim sale volume has increased by 1% on year to 7.7 lakh wheel rims. For steel wheel, sale volume has increased by 9% year on year to 43.6 lakh wheel rims. Coming to export front, Q2 FY24 has logged 109% growth in export revenue year on year. Export sales has been supported by an improving demand scenario. Export volume increased to 3.28 times in Q2 FY24 year on year and 2.88 times in H1 FY24 year on year. With this, now we open the floor for question and answers. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Mr. Abhishek from Dolat Capital. Please go ahead.
Thanks for the opportunity and congrats for a strong set of numbers. Sir, you are adding one more product, studying aluminum knuckles. So how much capex is required in that segment and how much revenue expectation for FY24 and FY25?
The total capex for the first million will be close to 200 odd crores. And that is on the exterior side. I think it will be between 180 to 200 crores. Which can generate close to 220 to 240 to 50 crores kind of a top line. And margin profile, I think we have already discussed previously.
So how much?
This will be broken into two parts. Some of that will be coming in this financial year because the mass production is expected by June or July 2024, and which will be half of the capacity, and half of the capacity will come into the next financial year.
And how much capex you have already done in this project?
In H1, we already did around 15.5 crore of capex, and we expect total capex in FY24 will be around 50 crore on the same knuckles.
Okay. So as you mentioned that the total capex would be around 3.2 billion. So what would be the capex for the alloy wheels, knuckles, and the AMW components? So in AMW components, this is a 1.38 billion. Knuckles would be around 100 crores.
In FY24, AMW is over and above what we supposed to be 320 crore. Right? In 320 crore, around 190 crore is on the alloy wheel side, 50 crore is on the knuckle part, and balance is on the other projects.
So that means the most of the capex would be incurred in FY24 only, and the FY25-26 capex would be at a very low side.
FY25
so
capex will be on the lower side.
Okay. And sir, what would be the effective tax rate in FY24 and FY25? In first half, the tax rate is a very higher side at around 31-32%.
FY24 will remain on the whole tax rate will remain at 33 odd percent. But it will be the last year for us to be on the same regime. So next year onwards, it will be 25% will be there.
Okay, sir. And in this quarter, basically, we have seen a very strong growth in the export market. So already export has touched around 330 crores. So what would be the guidance for full year FY24?
I will remain on course with what we had guided for at the start, that we are targeting a number of hovering around 600 crores for export.
Okay, sir. Thanks, sir. That's all from my side.
Thank you very much. Just an information to the management. Sir, your volume is really low. It sounds like you're speaking from a little distant. Please come a little.
Is this fine?
Sir, a little more, so that the investors
Is this
can.
fine?
This is much better.
Okay.
Okay, great.
Then the speaker is a problem. We'll try to rectify it for the balance course of the.
Sure, sir, not a problem. Thank you so much, and sorry for the inconvenience, ladies and gentlemen. So the next question is from the line of Sanchit Narang from Narang Family Office. Please go ahead.
Hello, sir. I'm audible?
Yeah.
Yeah. Thank you for the opportunity. Sir, sir, as I was looking through your trade receivables, they have increased quite a lot in respective to the sales increase. So why is that?
Yeah, the majority is on the account of exports because we have higher receivable days in exports.
Okay. Thank you. And sir, on a follow-up on that only, the U.S. exports is like 69%. Majority of it is to the U.S. So we are seeing a lot of uncertainty in U.S. So we look to diversify it in the future.
See, as of now, the volume breakup which is coming in terms of the feature and the anticipation that out of say odd 4,500 crores, we are targeting 600 crores. We don't see too much of uncertainty coming in from the perspective of the current customers. What we feel that the existing customers will ramp up their China supplies, ramp down their China supplies, and will ramp up their India listing. So from a perspective of customer concentricity, we don't see any problem. And we are fairly confident that given the kind of geopolitical as well as the current economic environment that we are visualizing, no risk of any region-specific issue is expected. What I only expect is that within the U.S., we expect larger amount of participation coming in next financial year from the alloy wheel side, which is going to give decent amount of growth on the export side.
Okay, that's helpful. And sir, any asset turnover guidance for after the capex is complete? All this capex.
It will be hovering between 3 to 4 times.
Thanks a lot, sir. That's all from my side.
On the receivable side, so if you look at in terms of number of days, they have just been partially upward from 24 odd days to 32 odd days. And it is primarily because of the fact that last month, that is September, was the best ever month in terms of sales. And exports have really surpassed.
Okay. So we are confident to maintain this cash conversion cycle that is currently there. We don't expect it to go upwards.
So what will happen if you look at the cash flow for the H2, the entire cash flow from operations will flow directly to the bottom line instead of getting consumed in the working capital. I guess whatever consumption, whatever increase that was meant to happen in the working capital has already happened.
Okay. Thanks a lot, sir.
Thank you. The next question is from the line of Ankush Sarvaria, who's an individual investor. Please go ahead.
Good morning to you all. I have 2 or 3 questions from you. The first question is, sir, we have seen an exponential increase in volumes of exports along with the revenue, but that is not reflecting in the margins of our numbers. So if in case the exports have gone up exponentially, the margins should have increased. Am I correct?
So just to figure it out that, I think in the last financial quarter also, we updated that the current environment of the business is fairly very competitive, and we don't want to lose the market share to US and Europe to any of the competitors, which is the South Asian countries. And the margin profile is intact with a little bit of benefit going to the customer in terms of some benefit for volume-led discounts, which is to the tune of 2 to 3 crores for the quarter. And I feel this is a very small cost for maintaining a very high rate of growth for sustaining the fixed cost factor for the factories. But within the feature, the factor which remains is that overall business mix is still at 11.25% kind of an overall margin mix. And we feel that this is very important to maintain this mix going forward, given the competitive intensity of the business within the scope of the wheels business.
Okay. My next question is, sir, on the front of acquisition of AMW, do we expect any tax relief in the next financial year due to this acquisition?
So, on a standalone basis, AMW auto component will see some tax relief based on there will be losses which will be carried forward. But on a standalone FSW, there will not be any tax relief pertaining to AMW.
Yeah, on the consolidated basis, what is the expected amount in absolute terms?
So that we are quantifying. I guess that number will be known once the financials of AMW auto component gets drafted. So that till the time we get handover. Based on that, we will be able to quantify what is the carry forward losses it is carrying, and that will be something which will be allowed to be set off. So probably by in Q4, we will be able to give you an exact number and the kind of benefit that we'll get from that.
Okay. And my last question is, sir, on the front of our relationships with Maruti. As I understand, your filing was that you have discontinued the small margin business with Maruti, and you were expecting that Maruti will also take supply from us in terms of alloy wheels. That was about 2 to 3 quarters back. So is there any progress in that, or are we still there?
So, see, on the relationship part, it is not as if that we have changed the relationship per se. It is a conscious call that we have taken based on the margin and the business which was in the table that we declined that particular order. But other than that, whatever order which is there in the pipeline are there with us. On the alloy wheel side, the discussions are going forward well, and we believe that very soon we'll be out with something on that.
Okay. Thanks a lot for that's it from my side, sir.
Thank you so much. The next question is from the line of Vignesh SBK from KCMA Wealth. Please go ahead.
Hi, sir. Thanks for the opportunity. Am I audible here?
Yeah.
So just want to understand your view on the CV cycle, like how is it going, and next year we might see any downturn and how it will impact our volumes?
See, on the CV side, the numbers based on H1 progress. So there is a jump of almost 20% in terms of volume, which is already witnessed. If you look at in terms of Q2 versus Q2, there is a jump of almost 29% in volume in the CV segment. And we believe that this probably growth will continue for the rest of the year. With the election stated next year, I guess there will be an additional impetus that we will see coming in from the government on the interest side. So we believe that this cycle will sustain.
Okay, sir. Thank you. And the next question is on the EV side. Are we catering to any EV players and any opportunity size?
See, on the EV side right now, the discussions with the Israeli company is on hold because of the obvious reasons known to everybody. And we hope that the country is safe and the management is also safe. And we are in discussions with them on a daily basis. I think this quarter should not have any development given the kind of circumstances that we have from that country. And we are awaiting the clearances of all the obstacles on the geopolitics on Israel. And then probably we'll be able to update you in the next quarter.
Thank you. So just on the domestic side, any opportunity you're looking at, sir, on the EV side? Domestic players?
The EV wheel side, we are anyway supplying close to 50% of the market, which is the wheels business, which is a hub wheel motor that we are trying to supply. We feel that the capacity expansion of small bit is being done at both the factories in Chennai as well as in Dappar, wherein some amount of money has been spent. And we feel this will take up the EV wheels business to the market share of close to 70-75% by Q3 end. And on the controller side, I think, as I said, the Israeli thing is fairly very fluid right now, and it will not look nice to talk business right now with the country. And we are letting the situation resolve its bit. And please wait for one more quarter to settle the things out on the Israeli front.
Sure, sir. I understand. Thank you. That's it from my side.
Thank you so much. The next question is from the line of Omkar Arora from KCT Family Office. Please go ahead.
Good morning, sir. My question is on the lines of employee benefit expense. It seems to have gone up significantly from 66 to 90 crores if you compare to the same quarter last year. So if you can know the reason for the same.
So, see, there are a couple of factors to it. I guess with the similar question in this quarter as well. So there is a couple of factors were highlighted. One is...
Sir, I'm really sorry to interrupt. This is the operator here. So can you please come a little closer to the mic? Because I've got an update stating that your volume is very low and people cannot hear you.
Okay. So now it is audible?
This is much better. Please go ahead.
Right. So on the employee expense side, I guess, as we narrated last time as well in Concall, there are a couple of factors which is getting this to increase. One, there is an increase in the volume. So if you look at even H1 versus H1, it is almost 7 lakh units which have got started. It's sold. Second, there is additional recruitment that we have done on the R&D side, and we are working on that part to help us out in subsequent business entries. Third is on the team that we have built up on Mehsana, wherein we are already expanding our capacity. Since we have preponed most of our capex pertaining to Mehsana, the team deployment has already been there, who have been doing extensive training so that they can be deployed immediately once the plant is up and ready. So that expense is also there. And then there is an impact of increment as well as minimum wages. All these have been bunched together there, which has increased and resulted in the spike.
Sure, sir. Thank you.
Thank you so much. The next question is from the line of Radha from B&K Securities. Please go ahead.
Hi, sir. Thank you for the opportunity. So I wanted to understand on this aluminum knuckles product. So this was an import substitute. This is an import substitute product for us. But is there any producer in India currently supplying these products to the OE?
So this, as you rightly said, it's an import substitute, and currently nobody is producing it. And as you know that it is this business has the potential of repeating its growth story like you have seen in alloy. So currently the penetration is less than 1%, and we feel that with the EV culture coming in and premiumization of the vehicles, the conversion of cast iron knuckle to aluminum knuckle will follow very, very soon, and we feel that domestic production capacity will give enough reasons for localizing it. And we feel that as an opportunity over next 5 years, this opens up an opportunity of 2,000 to 2,500 crores worth of an industry exposure, given that what is this sense that we have in the Western world. And we are just trying to get in this technology and trying to work out on this. And hopefully over next financial year, the financial performance of this business will also be highlighted.
Okay, and so currently then all the OEs are using, if my understanding is correct, all the OEs are using steel knuckles, and we are putting up capacity for aluminum knuckles.
Yes.
Okay, and so what would be, you mentioned the margins would be very high. So would it be for this business? Or I could not get the total.
On the margin side, we said that the margin profile will be similar looking, as we are estimating right now, will be similar looking like alloy wheels. So please give us some more time, because actual productionization will take another 6 months or so. I think in Q1 or Q2 of next financial year, the real picture will come into it, whether it is a little less or little more.
The total CapEx we are doing for this, you mentioned 200 crores.
Yeah.
And what was the revenue potential you mentioned, sir? I could not get that.
As I said, it's going to be between 220 to 250 crores.
Okay, understood. Thank you.
But that bottlenecking will be tried once the capacity is up and running.
Okay, thanks.
Thank you so much. The next question is from the line of Rohil Gandhi from PPFAS. Please go ahead.
Yeah, hi. Thank you. Am I audible?
Yes, please.
Yeah. Actually, my first question is relating to your alloy wheel capacities that you've set up over time. I just want to understand. So when I look at I believe the current capacities of almost up to 4.8 million, you'll be setting up for almost a total capex of around 800 to 1,000 crores. I just want to understand how, your capex, when I compare to some of your other competitors, has been a lot more efficient. So can you just shed some light as to how you were able to manage that?
I think efficiency, I don't know how to compare it. We are spending the money as it calls from the vendors. And majority of the capex in the first phase has been done on brownfield. So obviously, once you do a brownfield, it becomes a little easier than rather than doing a greenfield. So imagine this: if I do this 4.8 million kind of a capacity over 3 sites, then obviously the capex will be very different because of the utilities and the land and all the development that we have to do. But in our case right now, efficiently it has been done to extent that first 35 acres of the land was taken up for, envisaging the factory that we are going to be putting up a 5 million plant. And if you have to replicate this, the second phase of the land will be used. So right. I think efficient capital allocation by us as well as the team. And I think that's what I can talk about.
So was it that the land was already on your books and then you repurposed it towards the alloy wheels, which is what helped you?
No, so land was taken while we conceived this concept of alloy wheels. The first phase of 70-acre land was taken up maybe 6-7 years back. And the first phase was developed because, that's what the land was, utilized for. So within that first facility, we built up from 1 million to 1.5 million to 2.5 million to 3 million and now to 4.8 million.
Right. Understood. And can you also talk about what is your outlook on the global steel wheel market and what is the current size of the steel wheel market globally?
I think I'll not be able to give you a picture of globe because, it's a very, very, very tough question because this is a very dynamic kind of a situation. But I can give you a perspective of alloy wheels, which is, as I said earlier also, that 350 million wheels of aluminum wheels is getting consumed every year. Out of that, India contributes close to 9 million to 10 million wheels as the pace we are running right now, at a percentage of 37-38% of wheel penetration. And we feel that this 37-38% over next 2 years will reach towards 42 to 45% to give you a double-digit kind of a growth, maybe a low double-digit kind of a growth. And steel wheel is fairly known about India, but globally, I'll not be able to give you a perspective in terms of what is the big scale market in terms of total market that we have.
But even if you're able to, in a broad percentage terms, I just wondered from my understanding just how large that market would be. Would it be like just 5-10% of the global?
We are doing close to, I think, 3.5-4 million in terms of steel wheels this financial year at best.
Okay.
So I think if you talk about the overall market, we are doing not more than 10% of the global market, which includes the OEM business as well as the aftermarket, and which also includes all the segments of wheels that are being produced and used.
Right. Got it. Also, with respect to the AMW acquisition, would we be foreseeing to take on some more debt to finance that acquisition now that, considering that the cash on the balance sheet is just about 36 crores?
I guess the total amount that need to be paid at the time of taking over the possession is almost 138 CR.
Right.
So to start with, what we'll do is probably we'll avail a loan of almost 100 CR and the balance will be funded from the balance sheet.
Got it. Understood.
Because in any case, this year we are capex heavy, and there are big capex that we have undertaken. So maybe subsequent years will provide us opportunity to prepay most of the loans that will be availing now.
Right. And what would you say is your sustainable your inventory turns and your asset turns going forward? Especially, I want to understand the cash conversion cycle. What would be the sustainable number going forward?
So if you look at in terms of cash conversion cycle that we had, even historically, we were in the range of around 60 odd levels to 102 days.
Right.
And this got bettered in FY23 because debtor days were on the lower side when the number was almost 48 days.
Correct.
In H1, if you look at numbers, we are almost closer to 55. And
Right.
wherein inventory days have come down, the receivable days have slightly increased, and the payable days have come down. So there are further cushion to probably further better the inventory days. And we expect the number should remain in the range of 50 to 55 days in terms of overall cash conversion cycle.
Got it. Understood. Yeah. Thank you so much. I'll come back immediately.
Thank you so much. The next question is from the line of Avdut Joshi from Bryanston Investments. Please go ahead.
Hi, good morning. Thanks for the opportunity. Just one question. In alloy wheels, we have seen a jump in the volumes. It has gone from 7 lakh units to 8 lakh units YOY quarterly. So just wanted to know what's the share of export business into this? Hello? Hello?
Yeah, in H1, 1.12 lakh wheels we have sold in exports along the alloy wheel side.
So whatever the increase we have seen from 7 lakh to 8 lakhs in this quarter, how much is attributed to export?
Around 90 lakh wheels.
Okay. So most of the is attributed to exports there.
So can you please repeat the question?
So most of the increase, whatever we have seen, it is attributed to exports then in that case, right?
Increase with respect to alloy or increase in
alloy, just to alloy from 7 lakh to.
Okay, yeah. I guess if you compare it even H1 versus H1, the domestic alloy was hovering at around 13.7 to 13.73 lakhs. It is the export which has risen sharply. I guess from 0.24 lakhs, this number has already reached 1.12 lakhs. So if you recall, entire last year we sold almost 40,000 wheels, so we have already surpassed 1 lakh. And there are orders which are increasing on the export side, specifically for alloy.
Okay. And again, in the case of alloy, the whatever capacity we are putting up, much would be consumed by exports in that case, right?
So, see, what we decided internally when we were putting up this 4.8 million is that they'll be divided into two parts. 3.6 million will be for domestic, and almost 1.2 million will be kept for exports.
Okay. Okay. And it will. You expect that it will turn out in that manner itself, not expecting that exports will rise up addition to 1.2 million. Correct?
No, so then we can decide accordingly once the situation arises where the export interest rises more than 1.2 million, and that can actually rise when the kind of which are there overseas can rise. But then we'll take the decision accordingly based on once we reach that mark.
Understood. Understood. Thank you. Thank you. That's it from my side. Thank you.
Thank you so much. The next question is from the line of Chirag Shah from White Pine. Please go ahead.
Thanks for the opportunity, sir. Sir, my first question is to follow up on aluminum knuckles. Sir, if I got it correct, you said your capex is 200 crores, right? And revenue in first phase would be 250 odd crores. Is it right what I heard, sir? Hello?
Yeah, 200 crore of capex with a revenue potential of around 250 crores.
And so that would be phase one. So in case you want to further increase, how will this change? Because I presume like your alloy wheel plant, incremental CapEx to revenue would be significantly attractive.
So will it be fine if we give a breakup of the full year CapEx?
Yeah, sir. No, sir, I'm just sure, sir. No worries. I'm trying to understand that
efficiency, Chirag, the efficiency will depend on various factors in terms of what the customer is asking. It's a first time kind of a product. It's very, very niche in terms of the machinery. And what we have decided that as a feature, the first phase is coming at close to 1.2, 1.3 times of asset turn at a decent amount of margins. And given the learnings of the first phase, the second phase will be decided. So we will not be able to comment on the second phase of the capex of Knuckles.
And I presume that this phase one is only for passenger vehicles, right? There is nothing commercial vehicles in this.
Knuckle alloy is only for passenger vehicles.
Only passenger vehicles. And that also domestic in currently.
The export potential is very, very large. But as I said, that domestic market needs to be given to the OEMs for at least 2 years to make a mark on export opportunities. As we are speaking, there are 2 RFQs which we have come from export customers. They may be RFIs or they may be RFQs depending on how they take it because it's a safety part. So some bit of experience, some bit of market field experience will give a lot of encouragement to the export customers. So I don't expect export RFQs to be converted immediately, but the way that we have done it in alloy wheels, the similar philosophy will be used in export of Knuckles also.
And sir, is Knuckles already being imported and used, and how big that would be as a market size currently? Because Knuckles, this would be very specific Knuckles on very certain models, right? This is not a aluminum Knuckles is not a mass market product at least as of now. It will become over next 3, 4, 5 years. Is it a right way to look at it?
Yes, because Knuckles is expensive than the cast iron Knuckle. And it has a value proposition which has to come in from the perspective of various aspects. And the way that aluminum penetration was close to 5-7%, maybe 5-7 years back, and today it is at 40%, we expect a similar kind of a jump up coming into it over the next 5 years.
So this is really helpful. So second question was now, or slightly, probably I don't know how we'll be able to address it, but given that the product mix is changing now with AMW also coming in fold, and I'm trying to look at from a 3-4 year perspective, internally you focus on percentage margins or your focus is on per unit metrics?
I think we are making it very clear for past 4 years that every cost matrix in the company is on per kg basis.
Per kg basis, right?
Cost per kg, margin per kg, EBITDA per kg. We are trying to do that, but there are various mix. We are not. We are into manufacturing business, so like steel and cement, we have all the matrix on per kg basis, and we try to address it the similar way. Yes, for the purpose it is coming as percentage, but this is how we do it.
Because as an outsider, we get number of units sold, and it has got all type of mix, right? So that's what I'm asking. Nothing else. The reason is sequentially.
Eventually, investors will be much more interested to get into the percentage because that's what the eventual motive is. But yes, because these are business dynamics which keeps on changing up and down. So we change up and down according to that.
Oh, fair point. And so you alluded to a point that there is a rise in competition and you don't want to lose out volume. So this competition is coming from which part of your player, which part of your
the rise in competition? I said the competitiveness is increasing because when you are taking market share, the market is not growing at 15% on steel wheel. So market is fixed because Dwell's market grow at 2 to 3% only. So the market has to come from one player to another player, and within that there are competitive pressures, which is geopolitics, which is taxes, which is anti-dumping duties, and X, Y, and Z. But once you have gained the market share over past 6 months, you don't want to give away just for the sake of it and hit your fixed cost. So a little bit of compromise here and there, small bit, we'll try to do it, and we'll try to maintain the large momentum on the export side.
So my question is very different. Which geography?
Mr. Shah?
Just last follow-up to come to and then I'll. Sir, So my question was, is it South Korean players who are really playing a hard game, or it's Chinese? Hello?
I think we'll not be able to address that question because eventually the customer doesn't tell us which geography we are competing with. So we know fair bit of idea, but obviously pinpointing a specific company or a country or a continent will not be fair.
But it's several with Asian players, largely Asia-led competitors.
We are supplying the entire wheel component to the entire world.
Okay. Thank you. Thank you very much and all the best.
Thank you so much. Ladies and gentlemen, in order to ensure that the management will be able to address the questions from all participants in this conference call, please limit your questions to 1 or 2 per participant. Should you have a follow-up question, please rejoin the queue. The next question is from the line of Abhash Podar from Aeonius Alpha Investment Management. Please go ahead, sir.
Yeah, hi. Thanks for the opportunity. So just had a question in terms of the debt. So we are at 800 crores sort of a net number. So how do we think about debt going forward? Say in F24, we may have to take incrementally 100 crores of more debt. And for F25 as well, we may have to do the knuckle capacity, which is 150 crores more since you're spending 50 to 60 crores this year. So if you could talk about what would be debt, say, in F25 if possible, or in F24 end each year, and what is the debt number that you're comfortable with as a debt ceiling? So if you would just talk a bit about that, please.
I will take the last question first. That what is that comfortable number and respect to debt? If you look at last 4-5 years that we have been working on this, I guess the peak financial leverage that we had was almost 5 times. Today it's somewhere around 1.6. On the capex, so as Pranav pointed out that we are doing almost 320 crore of capex in SSWL. Which is divided across multiple projects. Primarily it is alloy wheel, then knuckle, and then there are a couple of smaller projects with respect to renewable energy, which is nothing but rooftop solar as well as hybrid, then automation, and then some maintenance capex. So all of that we have done. In fact, we have preponed most of the capex, which earlier we were thinking of probably dividing evenly throughout the year. We had to prepone looking at the kind of demand scenarios that we are seeing from the customer side. And major portion of capex is almost done. So we have, I guess, done almost 190 crores from this 320 crores. And the debt is already taken in the books. So for the later part of the year, we don't perceive that there will be any incremental debt that will be availing. And the balance capex of 120 crores will be funded entirely via accrual. The only debt which will come in will be for this AMW auto component acquisition, which will be almost 100 crores. For next year, the capex that we have on table is for this knuckle, which is hovering at around 145 to 150 CR. Other than that, there will be some maintenance capex of almost 25 to 30 CR. So all in all, 180 crore that will be spending next year. And this can be funded entirely via accrual, and there will be sufficient accrual which will be available in hand to probably taper off the debt that will be adding today. So over next 2-3 years, we will again get an opportunity to prepay the debt that we are availing as of now to build this gap.
Perfect. Thank you. That's it from my side. Thank you. Thanks and all the best.
Thank you so much. The next question is from the line of Aditya Velekar from Axis Securities. Please go ahead.
Yeah, thank you for the opportunity. So I just wanted to understand how will be the ramp-up profile for AMW plant, the volumes this year and next year, if you can throw some light on that.
So the AMW facility, as we shared earlier also, it will take 4 to 6 months for ramp-up in terms of the maintenance and the line setup and the power connections and the water connection, erections. And in next financial year, we are expecting the numbers to be starting from exports, which is the truck wheels as well as the domestic truck wheels. So we expect the next financial year to contribute maybe 20-25,000 wheels per month of larger wheels as to start with, and which is a mix of domestic as well as exports. This will, give you a top line of maybe 100 to 150 crores in financial year 24-25. And from financial year 25-26, we expect the larger number to be coming in based on the business that we have in our hands.
Yeah, that's helpful. So next question is, you have already given a guidance on exports for this year. So what's the visibility for the next year? Do we expect that the momentum in exports will continue? If you can throw some light on that.
So on the business side of exports, we feel that we have guided 550 to 600 crores kind of a number, and we feel that we are anticipating that confidence is there to pick this up. We feel alloy export should contribute further and should add up close to 100 crores in the next financial year from this base. And steel wheel will always be a challenge because, various factors like market volatility and freight and this and that. So we feel a 10 to 15% kind of a growth on the base that we make this year will be achievable in next financial year.
Okay, understood. Thank you.
Thank you so much. The next question is from Shashank Kanodia from ICICI Securities. Please go ahead. Hello, sir. Mr. Kanodia, are you there?
Yeah. Hi.
Please go ahead.
Yeah. So just wanted to check, there is a drop in ASPs for alloy wheels, right? From 4,900 rupees to a unit to 4,080 rupees to a unit. So is it just a function of dropping aluminum prices, or is there any product mix impact also?
Can you please repeat that? We could not get the question.
Yeah. So, sir, you've given a sales number of 15 lakh alloy wheels as a sales volume for first half, right? Driving a top line of 612 crores. So the derived ASPs is 4,100 rupees to a unit, whereas last fiscal year it was 4,500 rupees to a unit. So just wanted to check, is it that just a function of dropping aluminum prices, or is there any product mix impact also present there?
No, I think prices are completely fixed on the raw material side. So LME has moved out from close to $300,000 to $2,200-$2,300 right now. And the 2,200 will obviously not in our hands to move up and down. It's a complete pass-through. So majority of the business is on the base of raw material. And little bit of difference here and there will happen because of the product mix. Because right now, I think we are supplying the maximum amount of tonnage on the wheel, average weight per wheel, as we speak.
Okay. And second, sir, last year we did something like 1.76 crores of sales volume, right? So this year is possible to do something like 2 crore wheels?
This is what the target is. For this financial year, we are targeting close to 2 crores.
Okay. And lastly, sir, on the balance sheet side, so we did mention a reason for increasing receivables, but your payables has also dropped. So why would your payables drop is what I wanted to understand.
So there are two parts to it. And then there is reduction in the inventory levels as well. So inventory days have fallen from 99 odd days to 89 days. Part of the creditors were directly linked to inventory. So that is why there is a reduction. And some of the creditors, because if you look at historically, our payable days used to hover at around 65 odd days. So today we are spending at around 66. So we'll keep it at these levels. In fact, there is some reduction might come up because further reduction in the inventory.
Fine. Sure, sir. Thank you so much and wish you all the best.
Thank you so much. The next question is from the line of Sumangal Pugalia from Rare Enterprises. Please go ahead.
Yeah, thank you for the opportunity. So I have a couple of questions. Number one is our alloy wheel expansion to 4.8 million. What is the, will be able to get to that number this year and progress, and utilization levels right now is 100%. So where do you see that going for the year now for alloy?
As I said, we are here at 37-38% in terms of the market penetration, and we feel that this utilization will move from 37-38% to 42 to 45% in next 2 years.
Yeah, I'm talking about our capacity utilization.
I think 4.8 divided by 3.2 is what the capacity utilization for this financial year is going to be. And next year we are anticipating another 50 to 60,000 numbers coming into it. So 500,000 will get consumed the next financial year to reach to 3.8, 3.9 million. And balance 500,000 will be added into financial year 25-26. This is a buffer capacity which has been created for any sudden shock to the industry and sudden, demand ramp up because of festive season and everything. It doesn't look nice to continue to be under the pressure of capacity shortages.
Yeah, and last question on the international business. Are we any closer to getting a PV OEM contract, and what are the discussions and the stages of those discussions?
So as we have already updated that there are two customers where the discussions are already happening. Out of that, one customer, the testing and validation is already done. Second customer also testing and validation is happening right now. And we feel in next financial year, one of the customers will get converted into mass production.
All right. Thanks. All the best.
Hello.
Amit, are we audible?
Hello.
Are we audible?
Sir, yes, you are audible.
Okay.
So, Mr. Oza?
Yes.
Please go ahead.
Yeah, hi. So my question was on AMW. Is there any further incremental cost beyond this 138 crore we are spending on reviving the operations? And what would be the capacity of AMW in terms of number of wheels?
So the total capacity that we are getting will be in the range of 7 to 8 million. And in terms of outflow, the initial outflow will be 138 crores. Over and above this, we anticipate another 55 to 30 CR in terms of maintenance. So that may not be spent in one go. That may be in tranches that we'll be spending.
Okay. Thanks, sir. And my second question was on Knuckles, sir. In Knuckles, what is the total capacity that is coming up in the first phase? And, what kind of volumes, we could look at doing when we are saying we'll do around revenue of 250 crores. What could be the volumes in that?
So for the first phase of the project, it is 1 million kind of a capacity without debottlenecking, and with the current juncture of the product mix that we have. In the first financial year, close to 15 to 18% of the capacity utilization will come because we are going to be starting the factory in June, July. And in next financial year, close to 60% of the utilization will come. Currently, there are two customers where the LOIs have been given, and we are developing those prototypes and all the process.
And the last question, sir, in terms of EBITDA per kg or EBITDA per ton, if you can just give us a little bit of color, how is it spread across steel wheels, alloy wheels, and in terms of exports?
No, I think we never share these numbers because of the competitive nature of the business. But yes, while discussions are going on during plant visits and everything, we try to give some color, but not in the conference calls.
Thank you, sir.
Thank you.
Thank you so much. All right. So the next question is from the line of Pritesh Chedda from Lucky Investment Managers. Please go ahead.
So I just have one question. What is the margin differential between alloy wheel and steel wheel?
In terms of
EBITDA and gross?
I think we'll be able to give you some broad color of alloy wheels in terms of 525 to 550 in terms of the alloy wheels, and I think steel obviously will depend on various segments. So,
No, let's say steel wheel as your business and alloy wheel as your business blended. The gross margin differential is 500 basis points.
So if you look at specifically for passenger cars, because this is where we are in alloy. So alloy in terms of percentage EBITDA will be hovering between 15 to 17%, whereas similar wheel in steel will be hovering somewhere around 8 to 9 odd percent.
Your voice is very low. So you said 16 to 17 and 8 to 9. That's the number?
Yes, that's correct. That's correct.
Okay, so let's say 16 minus 9 is about 700 basis points. Is that the differential also at the EBITDA which goes down?
Yes.
Okay. So let's say I happen to ask you because the entire presentation is on alloy wheel versus steel wheel. So is it possible to share at that level alloy wheel versus steel wheel blended? You might sell alloy wheel to a four-wheeler or two-wheeler or whatever, and you might sell the steel wheel to all. At that portfolio level, is the margin differential lower than this 600, 700 basis points because you took passenger car as your prime example?
So, see, if you look at in the blended level, because we are not just into passenger car, if you look at steel.
That's right, sir. That's right.
So on a blended level, the percentages gap will probably narrow. Because
Okay.
in the PV and tractor segment, which will have EBITDA margins and percentages higher than the PV steel. So on a blended basis, that gap will narrow. So if you look at overall from 15 to 17 in alloy, the overall margin that we carry is around 11.5%. So the steel per se will be hovering somewhere in between.
Sorry, I missed it. I couldn't understand the last one.
So the gap will narrow if you look at in terms of blended.
Okay, so this 500, 600 basis point will look like 300, 400?
Yes.
Okay, and so then the question, that's just the supporting question. When your alloy wheel rises from 3% of sales to like 30% of sales, but the overall margin still stay at 11%. So what explains that? So is it just because we do the whole business on percentage margin, and that's the reason why we reflected that way?
No, so there will be a couple of things to it. One will be the mix within the steel business. Then there will be a mix between domestic and exports, because on the steel side we do both domestic as well as exports. So exports will have a higher margin versus domestic, and the blended, that's why moves up. And that's why the gap between an alloy and steel narrows. But if we are just the domestic steel and the domestic alloy, the gap will still remain.
Okay. Okay. Thank you.
Thank you so much. The next question is from the line of Sneha from SKS. Please go ahead.
Hello, sir. Thank you for the opportunity. I just have one question. I missed your outlook for FY24 and 25 in the beginning that you gave.
The outlook for what?
Revenue margins.
Okay. I think for this financial year, we are targeting between 4,500 to 4,700 odd crores in terms of the top line. And in terms of next financial year, we are anticipating anywhere between 5,000 to 5,100 odd crores, maybe on the top 5,200 odd crores. And what was the next question?
Margins.
Margins. I think for the first half, we have done close to 244 odd crores, and we expect this to be repeated for the next half on the best possible effort basis. And we expect the margin-led, revenue-led, little bit of margin expansion in next financial year.
Okay, that's very helpful. Thank you.
Thank you so much. The next question is from the line of Abhishek from Dolat Capital. Please go ahead.
Thanks for opportunity again. So, sir, what is your revenue and EBITDA guidance? In the last quarter, you had mentioned that you are expecting around 15% Y-on-Y growth on revenue and EBITDA. Is it intact or you have changed the guidance?
I think so. This is what I just answered, that on a base of 4,500 to 4,700 crores, I think 51 to 5,200 crores will be anywhere between 14-15% kind of a growth. I believe I've already cleared.
That is on the top line growth. And EBITDA side, sir?
I think I'll not be able to give you any pinpointed answer because it's not going to be very, very easy. but I think it's going to be in line with the current performance that we are trying to maintain. So margin percentages will be, that's what the intention is, to maintain the margin profile.
So as that, so in FY24 and FY25, what would be the revenue from the knuckles, sir?
FY24, there will be no revenue recognition. 24-25, I think it will be, one second, close to 25 to 40 crores at peak.
25 to 40 crores.
30 crores.
In FY24?
24-25.
Okay.
24, July 24 is the mass production, so it will come only in 24-25.
Okay, sir. Thank you.
Thank you.
Thank you so much. Ladies and gentlemen, due to time constraints, that was the last question. I would now hand over the conference to the management for closing comments. Please go ahead, sir.
I hope we have been able to answer most of your queries, and we look forward to your participation in the next quarter. And for any further queries, you may contact SGA, our investor relation advisor. Wish you all a happy and prosperous festive. Thank you.
Thank you.
Thank you so much. On behalf of Smiths Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.